Welcome back, listeners. Today we're taking a deep dive into a book that's been making waves, Morgan Housel's The Psychology of Money.
It's a fascinating read. It's not just about the nuts and bolts of finance. It really gets into how our minds, our emotions, all that stuff affects how we handle money.
Yeah, I mean, it's so easy to get caught up in the numbers and forget that there's a whole human element to money. So we're going to go chapter by chapter, try to extract the key insights that can help all of us understand our own relationship with money better. Sound good?
Sounds great. Let's dive in.
All right. So chapter 1, no one's crazy. Right off the bat, Housel throws out this idea that we all come to the table with these different experiences that shape how we view money.
And, it's so true. Instead of judging someone's financial decisions as crazy like we tend to do, Housel says we should try to understand the context behind those choices.
So, for instance, someone who grew up, let's say, during hyperinflation, their view on saving is going to be completely different from someone who grew up during a super stable economy.
Exactly. Our personal experiences, even the ones we don't even realize are influencing us, they have a huge impact on our financial beliefs.
Absolutely. Okay, chapter 2 is all about luck and risk. And Housel, he tells this amazing story about Bill Gates and his best friend, Kent Evans. Have you heard this one?
Oh, yeah, it's a classic. It really highlights how luck and risk are just, totally intertwined. I mean, Gates goes to one of the only high schools in the 60s with a computer, right? That chance encounter shaped his whole trajectory.
Wild.
And then Evans, who was, just as brilliant, dies in a mountaineering accident. It's tragic.
Man, it really makes you think about those sliding doors moments in your own life, the close calls, the lucky breaks.
Totally. And I think the takeaway here is that judging success just based on outcomes, it's totally flawed. You never really know the full story.
Okay, next up, we've got never enough. This chapter is kind of like cautionary tales, people who achieved massive success, but they kind of pushed their luck too far.
Right. It shows how greed and overconfidence can be so dangerous. More money doesn't always equal more happiness.
That story about John Bogle, the founder of Vanguard, really stuck with me. His friend basically said, you have something that, a billionaire hedge fund manager could ever have enough.
Right. That's powerful stuff.
Okay, on to chapter 4, confounding compounding. Now, here's where Housel really, really hammers home the power of time. And he uses the story of Ronald Reed, the janitor who amassed an $8 million fortune.
Incredible. And the crazy thing is, he didn't do anything extraordinary. He saved consistently, invested in good companies, and let time do its thing.
It's such a good lesson for anyone who thinks you need to strike it rich quick or make these risky bets to build wealth.
It's the slow and steady approach that really wins in the long run.
Right. Consistency over everything.
Yeah.
All right, so anyone listening who's maybe feeling intimidated by saving for retirement, remember, you don't have to be a financial genius. Start early. Be consistent.
Exactly. Small amounts invested regularly over a long time. The results can be amazing.
All right, so chapter 5, getting wealthy versus staying wealthy. This one explores how often companies, despite their success, end up losing everything.
Yeah, it's a good reminder that success is often, temporary. And staying wealthy can be even harder than getting there in the first place.
Housel says that having a survival mindset is key for long-term success in finance. He even quotes Michael Moritz, the head of Sequoia Capital, who says that his company's success is because they're constantly afraid of going out of business.
Wow. Even the most successful people, right?
Yeah. Okay, now chapter 6, Tails You Win, focuses on this idea that a few key decisions usually account for most of our investment returns.
So we should spend less time worrying about every little market move and more time focusing on those big pivotal moments that can really change our financial future.
He compares a good investor to Napoleon's definition of a military genius, the man who can do the average thing when everyone around him is going crazy.
It's about staying calm and rational when everyone else is panicking, sticking to your plan, even when things get emotional.
All right, moving on to chapter 7, freedom. This one's all about how money's greatest value is giving us control over our time.
Yes. It's the freedom to do what we want, when we want, with who we want, without being stuck in a job we hate or worrying about money all the time.
Housel and his wife, they talk about how they prioritized saving so they could pursue work they loved. They weren't just chasing the biggest paycheck.
That's inspiring. It's a good reminder that financial independence isn't about, being a millionaire. It's about aligning your money with your values and what you want in life.
Absolutely. Okay, Chapter 8, Man in the Car Paradox. This one's interesting. It's about how we tend to admire people for their fancy cars, expensive stuff, but the truly wealthy,
Hmm.
they don't always show it off.
Yeah. It's ironic. We chase these outward signs of wealth, but the real wealth is often hidden. It's the investments and assets that we don't see.
So basically, don't get caught up in trying to keep up with the Joneses. Real wealth is about security and freedom, not just material possessions.
Right. And Chapter 9, Wealth is What You Don't See, builds on that idea. The most valuable things are often invisible. The money you've saved, the investments that are growing, the peace of mind that comes from being financially secure.
Think of Ronald Reed again, right? He wasn't driving a fancy car or living in a mansion.
Exactly. True wealth is built over time. It's about being patient, disciplined, making smart choices with your money, not flashy stuff.
Okay, Chapter 10 is a simple title. Save money.
Yeah.
But I think Housel makes some great points about why saving is so important.
It's not just about delaying gratification, it's about giving yourself options for the future, a buffer for unexpected things, the ability to take chances, to have more control over your life.
He says it so well. Wealth is created by suppressing what you could buy today in order to have more options in the future.
It's not about deprivation, it's about empowering yourself.
All right, Chapter 11 is titled Reasonable Rational. What do you make of that?
It's pushing back against this idea that all our money decisions have to be perfectly rational. Because, come on, we're human, we have emotions, we have biases, all that affects our choices.
Yeah, and sometimes, a reasonable decision that you can actually stick with, even if it's not like the mathematically perfect option.
Is actually the better choice in the long run.
Exactly. He gives this example of investing in companies from your own country. Maybe not the most diversified approach, but that familiarity could be what gets you to actually start investing.
So finding that balance is key, a way to participate that feels comfortable and you can actually maintain over time.
Okay, Chapter 12, Surprise. This one is a bit of a, reality check, I think.
Hussel's saying that the most common theme in economic history is, well, surprises.
He asks you to imagine the last century without personal computers, without the internet, without smartphones. All those innovations, we didn't know they were coming.
It shows how much is actually beyond our control. Even the things that seem predictable, like the economy or the stock market.
So, for anyone trying to time the market perfectly or predict the future,
Good luck.
right, a good financial plan has to embrace uncertainty.
Right.
Right, and then room for error kind of builds on that. Expecting everything to go perfectly is just setting yourself up for trouble.
Life throws curveballs. Recessions, pandemics, job changes, building in some slack into your savings, your budgets, your timelines. That's what helps you adapt.
Housel says to have more savings than you think you need. Be conservative when you're estimating future returns, all that.
I love that idea of slack. It takes the pressure off. You don't have to be perfect.
And then comes, you'll change.
Yeah.
I mean, this one kind of hit me hard because, yeah, our goals and priorities, they change over time. What seemed so important in my 20s is not the same now.
Right. And our risk tolerance changes, family situation, our values even. Housel says that embracing this idea of change can actually reduce anxiety. You don't have to have it all figured out right now. Things will evolve.
I like that. Okay, nothing's free. This one's about the hidden costs of investing.
Yeah, it's easy to get excited about those potential returns, but you got to remember the fees, taxes, all that stuff can really eat away at your profits.
Even small fees over decades can add up to a lot. All right, let's talk about Chapter 16, You and Me. It's all about the psychology of bubbles.
What I found fascinating here is how Housel explains that bubbles aren't just driven by irrational exuberance, It's also about different types of people with different goals participating in the market.
So you have your long-term investors, they're focused on value, on the fundamentals of a company, but then
But then you have your short-term traders. They're just trying to ride the wave, make a quick profit, even if it means ignoring the long-term value of a stock. They push prices up beyond what makes sense.
so that helps explain why these crazy prices can last for a while, right? Because there are different players with different motivations.
Exactly. It's understanding that psychology that can be really valuable.
All right, we're making good progress here. On to Chapter 17, The Seduction of Pessimism.
Ah, yes. Why does pessimism, especially about money, always seem so convincing?
I think part of it is bad news just grabs our attention more,
Hmm.
And it's easier to imagine worst-case scenarios than to envision positive outcomes.
True. And we tend to overestimate the chances of bad things happening to us personally. That can lead us to make choices based on fear, not logic.
So How do we combat that?
Housel says to be aware of this negativity bias, to look for the progress that's happening, even if it's not making headlines.
That's a good point. It's easy to get caught up in the doom and gloom. Okay, chapter 18, When You'll Believe Anything, explores how stories, especially about money, can really shape our beliefs.
It's like the stories we tell ourselves often have a bigger impact than the actual economic reality.
Okay, I need an example here.
Imagine an alien visiting Times Square on New Year's Eve in 2007. Everything's brimming, right? Then the alien comes back 2 years later during the financial crisis. Same crowds, same celebrations, same outward signs of economic activity.
But the feeling is totally different.
The story has changed. In 2007, it was all about growth and abundance. In 2009, it was fear and collapse. And that shift in the narrative, even though the alien couldn't see it, was the most important change that had occurred.
It's amazing how our beliefs can actually influence outcomes.
Right. If we believe the economy is strong, we're more likely to invest, to spend, but if we believe it's weak, we hold back.
It's a good reminder to be careful about the stories we believe, especially when it comes to money.
Base your decisions on facts, not just hype or fear. Now, how about All Together Now, chapter 19?
This one is about how there are some universal truths in finance, but people come to different conclusions about how to apply them to their own lives. What works for one person might not work for another.
He uses that crazy example of the guy who declares bankruptcy even though he owns a $14 million mansion.
But like, what is success, really? We all have different definitions.
Right. Housel encourages everyone to figure out what enough means for them, to make choices that align with their values, not just follow the crowd.
And finally, we have chapter 20, Confessions. Housel gets personal here, sharing some of his own financial philosophies.
Yeah, he talks about how his main goal has always been independence, the freedom to work on what he enjoys, when he wants, for as long as he wants.
And he says you don't need a fortune to achieve that. It's more about living below your means, having a high savings rate. He's also a big fan of index investing, the simple approach.
He makes a great point about why beating the market is so hard. If it were easy, everyone would do it, and there'd be no opportunity.
So we've covered a lot of ground here. We've talked about the power of compounding, the importance of saving, the dangers of greed, the allure of pessimism. It's a lot.
And we've explored all these psychological factors that play into our decisions with money, from our personal experiences to the stories we tell ourselves.
We've also touched on the idea of defining what enough means for us, aligning our choices with our values, and using money as a tool to gain control over our time.
But before we move on, I want to bring up one more story that Housel shares. It's about a man who went to the dentist for a toothache in 1931.
Oh, no, this doesn't sound good.
He woke up hours later, and they had removed 16 of his teeth and his tonsils. Just like that.
Wow, that's scary.
Right. But it was a different time. Doctors had all the power, patients had no say. Housel uses the story to show a parallel in the financial world.
You mean like how financial advisors sometimes act like they have all the answers and we should just listen blindly?
Exactly. But as Housel points out, there are no one-size-fits-all solutions in finance. What works for one person might not work for another. It's so important to understand your own values, goals, and how much risk you're comfortable with.
So don't blindly follow advice, even if it comes from a well-respected source.
Yeah.
Do your own research and make choices that feel right for you.
Absolutely. And that's where Housel's advice comes in humility, forgiveness, managing your money in a way that helps you sleep at night.
He also reminds us that time is the most powerful force in investing and that we should use money to gain control over our time, not let it control us.
He says, instead of trying to predict the future, focus on building a margin of safety, a financial plan that can handle different outcomes, and save money, not as a punishment, but as a way to empower yourself and create more options in the future.
So many valuable insights.
Now, let's take a minute to reflect. What chapters or stories really stood out to you? What resonated the most?
That Ronald Reed story, man, it's so inspiring, like someone with a regular job can build real wealth. It just takes patience.
It's like the perfect counter to all those get-rich-quick schemes out there.
Totally. And that chapter, Tails, You Win. That one really got me thinking, too. A few big decisions can make all the difference.
And those decisions often happen when things are uncertain, when everyone's freaking out. That's why it's so important to have a plan, to stick to it.
Yeah, don't panic. Easier said than done sometimes, though. Speaking of which, that room for error chapter, that was a good one. You got to have a buffer for when things go wrong.
Housel's advice on saving more than you think you need, being a little more conservative with those future return estimates, that's smart.
It's like creating a cushion, right? So you don't get knocked off course too easily.
And it takes the pressure off needing to be perfect all the time, which, let's be honest, none of us are.
Right. Okay, so man in the car paradox. This one really made me question how we think about wealth and status.
It's easy to get caught up in the fancy cars and the big houses, but
But that's not really what wealth is about, is it?
not always. The truly wealthy, they're not always flashing it around. It's about security, freedom, living a life that's true to yourself.
Yeah, don't get sucked into that keeping up with the Joneses trap.
And wealth is what you don't see. That chapter kind of takes it a step further. Real wealth, it's often hidden. It's the investments, the peace of mind that comes from knowing you're financially secure.
It's a different way of looking at things. Not about impressing anyone, it's about making choices that help you build a good life.
And then there's saving. I loved how Housel framed it in the chapter Save Money. It's not a punishment, it's giving yourself more options in the future.
Wealth is created by suppressing what you could buy today in order to have more options in the future. That quote stuck with me.
It's so true. Saving isn't about deprivation, it's about investing in yourself and your future.
And I think that ties into reasonable rational, too. You don't need to be perfect with your money decisions. Find a system that works for you, even if it's not the most mathematically optimal.
Sometimes making a reasonable decision that you can actually stick with is better than striving for perfect rationality and giving up because it's too hard.
Like investing in companies you understand, even if it's not the most diversified portfolio. Okay, that chapter's surprise. It's a good reminder that we can't control everything.
The most common theme in economic history, surprises, things we didn't see coming.
So, yeah, trying to time the market perfectly, probably not going to happen.
Nope. Embrace the uncertainty, have a plan, but be ready to adapt.
Which brings us to room for error. Expecting everything to go perfectly, that's just asking for trouble.
Recessions, pandemics, job changes, those things happen. Having some slack in your savings and your budget, that's what helps you get through it.
Like having that emergency fund, right? Everyone always talks about that. Okay, what about pessimism? We all struggle with that, especially about money.
Yeah, the seduction of pessimism. It's so easy to get sucked into that negativity.
I think it's because bad news just grabs our attention more. And it's easier to imagine the worst-case scenario than it is to picture things going well.
We tend to overestimate the chances of bad things happening to us. And that fear can drive our decisions, not logic.
It's important to be aware of that, right? That negativity bias.
Definitely. Look for the good stuff that's happening too, even if it's not making the headlines.
And those stories we tell ourselves, that's another big one, the When You'll Believe Anything chapter. Those stories can really affect how we see the economy, how we make decisions.
Our beliefs can become self-fulfilling prophecies. If you believe the economy is strong, you're more likely to invest, to spend. But if you think it's going to crash...
You pull back, you hoard cash, you might even make the situation worse.
Exactly. Be mindful of the stories you're telling yourself. Base your choices on facts, not just fear or hype.
That alien visiting Times Square example, that was a good one. Same place, different years, but the whole feeling had changed because the story had changed.
Okay, so chapter 19 all together now. There are some truths in finance, but how we apply those truths to our own lives, that's what matters.
What works for one person might not work for someone else.
That story about the guy with the $14 million mansion who goes bankrupt, that really stuck with me.
Right. It shows that appearances can be deceiving. What's important is figuring out what enough means to you, not trying to live up to someone else's standards.
And then there's Confessions, the last chapter. I always like when authors get a little personal.
Me too. It was interesting to hear about Housel's own financial philosophy, like how his main goal has always been independence.
He wants the freedom to do the work he enjoys, when he wants, for as long as he wants.
And he got there not by earning a ton of money, but by living below his means, saving a lot, and choosing work that he found fulfilling.
It's about aligning your money with your values.
I also liked his take on index investing. It's a simple, low-cost way to invest, and you don't have to be an expert to do it.
He makes a good case for why trying to beat the market is so tough. Sometimes the simple approach is the best approach.
Okay, so before we move on, I got to ask about that dentist story.
Mm-hmm.
The one where the guy goes in for a toothache and ends up losing 16 teeth in his tonsils.
Yeah, I know, right? It's crazy. But it shows how much things have changed. Doctors used to have all the power.
So you're saying that sometimes financial advisors are like those old school doctors. They act like they have all the answers and we should just do what they say.
Sometimes, yeah. But like Housel says, there's no one-size-fits-all approach to finances. You have to understand your own situation, your own goals, and make choices that are right for you.
Don't be afraid to ask questions. Do your own research. Don't just blindly follow advice.
Exactly. And this is where House's advice is so helpful. He talks about humility, about being okay with making mistakes, about managing your money in a way that gives you peace of mind.
Focus on the long term. Use money to gain control over your time, not the other way around.
Build a margin of safety, save money, make choices that are aligned with your values. Those are some key takeaways for me.
Okay, so all this talk about personal finance and how it's changed. Housel also spends a lot of time on how the American consumer has evolved. He talks about how the post-war boom led to this huge surge in spending, but now it feels like a lot of people are struggling to keep up.
The big stretch, he calls it. The pressure to maintain a certain lifestyle, even if it means going into debt, it's stressful.
And I think he's right. We need to rethink what a good life really means. It's not just about stuff.
It's about experiences, relationships, finding a balance that's sustainable, aligning your spending with what truly matters to you.
I love that. We don't have to be slaves to consumerism.
Exactly. Financial freedom, it's not just about having a lot of money. It's about having the time and resources to pursue your passions, to connect with people, to make a difference.
That's what it's all about. Okay, so now let's shift gears a bit. What are some of the most actionable pieces of advice that resonated with you? Like concrete steps we can take to improve our financial well-being? One that really stuck with me is like manage your money in a way that helps you sleep at night. It's so simple, but it's kind of profound, you know?
Totally. It's about finding that balance so you're not like constantly stressing about money. It's not about hitting some magic number. It's about a system that works for you.
Yeah. And Housel also says it's okay to be wrong, especially with investing. He actually says you can be wrong half the time and still end up doing really well.
It's true. It takes the pressure off. You don't have to be perfect. It's more about learning from those mistakes and adjusting your strategy. And speaking of strategy, the thing about time horizon, that really hit home for me. The longer your investments have to grow.
The better the results.
Exactly. Patience pays off. And that kind of brings us to, I think, one of the biggest takeaways from the whole book. Use money to gain control of your time.
That's what it's all about, right? Financial independence. Being able to choose how you spend your time instead of being stuck in a job you hate or always worrying about bills.
Freedom.
Yeah.
Housel says that's the best return on investment you can get. It's about using your money to create a life that's really meaningful, one that aligns with what you value.
And that's a great point. This whole idea of like what a good life means. Housel talks about how American consumers have changed, how we got caught up in this spending frenzy after World War II, but now it feels like a lot of people are just stressed trying to keep up.
The big stretch, yeah. It's tough, that pressure to have the right car, the right house, the right clothes.
Even if it means going into debt.
Right. And that's why I think we need to rethink what we're striving for, maybe focus more on experiences, on relationships, those things that actually bring a lasting happiness.
It's about making choices that support your well-being in the long run, not just chasing the next shiny object.
And realizing you don't have to keep up with the Joneses. It's your life. You define what success looks like.
That's a great message. So as we wrap up our deep dive into the psychology of money, I hope you're feeling a little more empowered, a little more in control of your financial life.
It's not just about the numbers. It's about understanding yourself and making choices that are right for you.
And remember, you don't have to figure it all out overnight. It's a journey. Keep exploring, keep learning, and keep diving deep.